In this video, we're going to do a quick overview of our Apple earnings model and how it works, and then we're going to review where the consensus estimates for Apple stand relative to management's guidance given last quarter. And finally, since volatility and interest rates were such a hot topic last week, we're going to take a look at how these two inputs can have an impact on Apple's valuation. Before we get started, I just want to show you where you can go on our website to download this Excel-based model if you're interested. If you go from the home page, you can click on Models in Focus, and you'll see additional videos that give you some additional details on how our valuation methodologies work. And then from there, you can click on the Apple Inc. model, and you'll see that there's a link where you can download the Excel file. So back to the model, it's set up the same way as all of our other models. You'll see in the upper left-hand corner the color legend. Anywhere you see a blue cell, those represent our estimates, and those are the numbers that you want to change and sort of stick to those numbers, so you leave the rest of the model unchanged if you want to run some different scenarios for Apple. Purple cells represent company guidance, and if it's a range, it's usually the midpoint. Orange cells represent consensus estimates. So if you take a look at how the Apple model is set up now, we don't have any purple cells for the most part because we're calibrating this model towards consensus estimates, so it doesn't necessarily fit the midpoint of where management's guidance was. But if you hover over the cell, you'll see that we have the comments, which have the guided range for each one of the metrics that they actually gave guidance on. Below that, you'll see our summary of our valuation details. So you'll see our multiple-based valuation is 144, and our discounted cash flow-based valuation is 126. When you weight those 50% each, you get a valuation of 135. So it's still well ahead of what the current value is, about $106 after last week's sell-off of about 10% or so. From there, you'll see the income statement. You'll see a section on segment details. Then we have a full balance sheet, cash flow statement. Here's our details on our multiple valuation and discounted cash flow. So we recognize that most people are really only looking at modeling earnings and not the full balance sheet and cash flow statement, and they're using a multiple valuation approach and not a discounted cash flow approach, which is why we've collapsed all of these. So if you are taking the easy route, just go ahead and leave them collapsed so they don't distract you. If you're not, you can expand them and you can see the full balance sheet in the full cash flow statement. Okay, so how do we get to these earnings up here? If you go down to the segment details, you can see that we have it broken out by product, by units sold, and average selling price. So if you expand each of these categories, you'll see iPhones, iPads, Macs, iPods, iTunes, and iWatch, and then the other category. So as we know from last quarter, Apple doesn't actually disaggregate the other category from iWatches. So for the time being, we're making estimates on how much we think they've sold. But you see, we've indicated that by shading the color blue, and you can change that if you'd like. Then you go to the units sold and the average selling price, and there's also some profitability ratios down below. Okay, so next we're going to take a look at where the consensus estimates stand relative to management's guidance. And we can just go right down, starting with sales. Management guided sales to between 49 and 51 billion. Right now, the street is just below the high end of that range. Management guided gross margin between 38.5 and 39.5%. And if you scroll down, I'm just going to freeze these frames. You scroll down here to the ratios. You can see gross margin of 39.2%, again just below the high end of management's guided range. Management guided other income and expenses to 400 million, and we have just slightly above that. And a tax rate of 26.3%. We're 26.2%. And keep in mind, the reason that we're different from the guidance is that we're just trying to get back to the final consensus estimates for each one of these metrics. So final consensus operating income, income before tax, net income, and diluted EPS. Okay, so in general, the street is in line with management's guidance for next quarter, but just at the high end of the range on most of the metrics. Okay, from here we're going to now collapse all of these again so that we can just focus on the impact of changes in volatility and changes on interest rates on Apple's valuation. So this is obviously not going to impact the multiple valuation since there's no change to earnings. It's just that your multiple would have to change. So if you see that there's an increase in risk due to an increase in volatility, technically you should decrease the multiple that you're using for your valuation. And in a similar fashion, if you see the Fed is going to start increasing interest rates, maybe 25 basis points every quarter, you should also reduce your multiple. But it's a little bit more difficult because there's some dislocation between those metrics. Now for the discounted cash flow valuation, it's very easy to see what the impact would be since both volatility and interest rates are inputs into the discounted cash flow valuation. And you can see these two blue cells are where they show up. So we can just go ahead and change those just to see what the impact would be. And keep in mind, we're going to be looking at this section of the valuation, so this is our discounted cash flow based valuation, not the multiple based valuation. So let's start with volatility. Right now we've got 16.63% implied volatility. This is a 3-month average figure. Last week the VIX was over 28% on Friday. So obviously our 3-month average is much lower. But 1 day or 1 week change in volatility, we actually would not just put that value in. So you wouldn't want to put 28% in here. It's going to be the 3-month average daily volatility. But let's just say, for the sake of argument, that volatility stays much higher than what we saw last quarter, and let's put in a 1 percentage point increase in volatility and see what impact that would have. So I'm just going to add to the 16.63%, I'm going to add 1%. And watch the valuation change. Okay, so that brought it down to about $121. So if we undo that, we were at 126, and then we go to 121, which is a change of $5, or about 4% of the value of Apple shares. And we'll change that back. Now let's go to interest rates. So let's say the Fed starts to increase interest rates. This is the 3-month average 10-year U.S. Treasury yield. So this is what we're considering the risk-free security. And this is what we use this within the capital asset pricing model to drive our weighted average cost of capital for Apple shares. If you want additional details on how this works, again, you can go to our Models in Focus section of our webpage. And this video here goes into details on how we derive each of those inputs into our discounted cash flow valuation. So back to the model. Now let's say the Fed starts with a 25 basis point increase. Now keep in mind that the U.S. Treasury securities are not going to instantaneously gap up to the new Fed funds rate, but let's just assume that the market starts to incorporate an increase in interest rates at that time. But for right now, let's just go with 25 basis points. Okay, so you can see that brought the value down by about $3.75, which is about 3%. So you can see what the impact would be if volatility continues to stay high and if the Fed increases interest rates. So is the current price move, or where we stand now at 106, a fair price? It's, an argument could be made. We think it's going to go higher based on the multiple and where that multiple lies relative to historic trading range for Apple. And but other people could make the argument that if volatility continues to remain high and if interest rates increase, or maybe sales slow in China because of a slowdown there could be a significant impact on Apple. So if you'd like to try some different scenarios, maybe you want to change the number of units sold or average selling price for iPhones or iWatches, please download our model and give it a shot. And be sure to check back later on after we updated our volatility and interest rates for the end of this quarter. Thanks for watching.